Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a kickstart video where I take a look at three of the major currency pairs of euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. It's Monday, new start to a new trading week, but the trends from last week's trading with the Trump trades are in full effect, including a higher dollar. So let's get started. Looking at the euro versus U.S. dollar, the dollar did rise in trading on election day, and then we had that corrective move to the upside last week, which took the price back toward the 100 bar moving average on the 4-hour chart, where sellers entered, and we moved lower, closing the week with the price down, testing the low price from the election right here near the 1.06819, bouncing modestly higher in the new trading here today. We fell below that low price from last week, and we also fell below this swing area here. The swing area is defined by 1, 2, 3 separate lows from 3 separate weeks going back to the month of June. Each of those lows found support before moving sharply to the upside. So it was a key level to get to and through, and indeed we fell through that level in trading here today. Also broke below this low right here, going back to, it looks like, the end of April. That comes in at 1.0649. We are back just above that level, but close resistance will be at the 1.0670 level. Absent that, or more conservative risk level for short-term traders, would be a move back above the 1.06819. If the price can't get above those two levels, and are the buyers winning? No, they are not winning. The sellers are still in control. So be aware of that. You have to get above these levels to take back more control for the buyers. Absent that, downside is still the favorite area. But on a move lower, watch the 1.0600 to 1.06097 level. Those are the low prices from April, and also the low prices for the year. To go back, it's these lows right here. So be aware of those levels. That's the next key target on the downside. Break below them, and we're trading at new 2024 lows. Let's take a look at the dollar versus yen next. And if we look at the 4-hour chart in this currency pair in trading last week, the corrective move to the downside after the election came down to test the 100-hour moving average. It found willing buyers against that level and trading here today. We also based ahead of that, and we started to move higher. I would return back to this 153.88 level. That was the high price going back to, I guess that's the end of July, early August, and also the high price from not last week, but the week before on two separate occasions. So getting above that 88 level is key for the more upside momentum for this pair. It looks like we did move just a little bit above that level in trading here today, but have backed off a little bit. So watch 159.88 level. If you get above that level, we'll look toward 154.54 to 155.09 on a move out back to the downside. Close support comes against a 61.8 at 153.39. You'd want to see the price stay above that level to keep the buyers firmly full and hungry for more upside momentum in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. This currency pair has had more ups and downs than the euro, than the dollar versus yen. You can see the movements in this currency pair over the last few weeks. Up, down, up, down, up, down, and we're back at the downs, or near the downs, and this support area comes between, we'll take the low from last week of 128.32 up to 128.72. I know it's wide, but this area goes back in time to this period right through here as well, where we had resistance, keeping under it, moving up was more support, then moving below is more bearish, and then moving up. So finally sends the price to the upside. So moving back to that area right through here is key. We're going to need to get below that level, and then you can add the 200-day moving average, which is looming. We haven't been below that moving average since early May, going back here. That is going to be another key level to get to and through on the downside if the sellers are to take more control in the sterling versus US dollar. So be aware of that. We could see a rebound in the sterling just because it's been up and down more lately. If we get above the 129.065 level, that was this low right here, going back not 1, not 2, but 3 weeks ago, that would be another victory for the buyers, and then would look toward the 129.38 level, which just ironically or whatever, has had a lot of interest at that level, going not only more recently, but going back in time right through here. So pay attention to that level, and then we start to get into the moving averages on the top side. So there you have it. A look at some of the major currency pairs to kickstart your trading day. It is Veterans Day in the U.S. The bond market is closed, but the stock market is open for trading today. So we'll see if that has any impact. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.